Let's check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who's also the editor of CoinDesk's The State of Crypto newsletter. All right, so we do have regulators looking at Luna UST. They forked over the weekend. We've got Luna Classic and Luna version 2, as well as Terra Classic and Terra version 2. So what's the latest on what regulators are saying about that?
Good morning. Yeah. This is, it's so Luna 2 forked and it's already down. We're seeing regulators in the UK and South Korea already starting to take a closer look at this and ask what is going on. I suspect we're probably going to start seeing more and more regulators in other countries also take a closer look at this because, I think the expectation was, okay, this project failed, it collapsed, and so what regulators would be looking at is a post-mortem and how to prevent something like this from happening again, and then it forked. So I think it's going to inspire a little bit of urgency among some regulators who perhaps have concerns about the underlying both the technological mechanism as well as the economics of the project, and who knows how that'll lead, but this went from, okay, well, this is in the past, it's going to, we have to stop this in the future, to, oh, it's actually back again.
And it's surging over almost 50%.
Well,
it's baffling.
Hold on, because it's surging, but let's be clear that it also had a nice drop. So it's been volatile.
Right. And, I think probably that, not to dip into the market side of it, but I imagine volatility was probably expected for the beginning, for the first couple days, if not weeks. So, how it'll shake up in the long term is still probably way too early to tell. But, from a regulatory perspective, what your FCAs and your, other regulators are going to be asking is, are investors protected? Are they at risk of another, massive loss? Is there going to be another situation where people are going to, post to Reddit about, losing their life savings? It doesn't seem like it's, going to be quite that bad yet. Yeah.
So, but some of the ways in which the stablecoin, algorithmic stablecoins have been touting themselves as beyond regulation because they're not actually taking in dollars. They're not backed by actual assets that are controlled by governments, that they're just maintaining a price using synthetic cryptocurrencies as a way to sort of synthetically create this dollar asset or this dollar equivalent. But in fact, it's not. So how do regulators ultimately regulate something that doesn't involve actual dollars changing hands?
Yeah, I mean, that's definitely going to be, one of the, I think, probably bigger questions that we'll see. But the thing is, if you're talking about regulating stablecoins that are backed by assets, that question has always been kind of, it's been narrowed to a few specific agencies. So, just looking at the U.S. as an example, the SEC has a potential claim that asset-backed stablecoins are money market funds or similar to money market funds, and therefore they fall under securities law. But that doesn't mean other regulatory regimes might not be more applicable to the algorithmic stablecoins. And, I think one of the things we'll be looking at or we'll see is regulators saying, okay, well, if we can't regulate the project directly, we could at least regulate how it's traded. So, for example, exchanges might have to, exchanges that are being treated as money transmission businesses under state law might have to deal with some more specific regulations about, how they're listing projects, how they're addressing and, offering these projects to the, retail investor. You might look at, how, for example, commodities regulators like the CFTC might take a look and say, all right, well, this is, some kind of a, I don't think it makes a lot of sense as a proper derivative, but, there's an argument to be made that, okay, well, it's kind of more of a commodity than a security, and therefore maybe somehow it kind of falls under that kind of, particular bucket. And so, once again, the question might be, how is this being offered to retail? A lot of exchanges, including in the U.S., have listed Luna 2 and or whatever, Luna Classic, and they're going to be the vectors by which some of the regulators are going to say, okay, well, we can't stop this from being issued, but we can at least try and prevent this from being offered to everybody in the world.